Hey, what's up, everybody? Welcome to our seventh episode here of Tenacious Tribe. My name is Ruben Rodriguez. I'm your host here today, and yeah, what I brought for you today is something special, of course. As I try to always, I don't know if I managed to do it all the time, but I hope you enjoy this for sure this time. Um, first and foremost, before we kick off. Hope you guys having a very nice trading week with a lot of profits. Market is once again very bearish, so to say, very unstable. Still on its way down. Still, people wondering what the bottom is. It definitely not reached the bottom. Still, my as per my work, I'd reckon it would be at something like minus 40, inclusively minus 50%. We will see from its latest peak. But once again, I'm not here to talk you about the S&P 500 or the market. I'm here to talk you about something else, something that has been very trending over the past couple of days. Cathie Wood. If you don't know the name, she's the CEO and founder of the ARK Investing. ARK, they have an ETF, and this is basically actively manage the ETF. And yeah, I mean, shame on me. I consider myself an investor, but before this week, I was not quite sure who Cathie Wood was. I saw a lot of buzz around her. Cathie Wood this, Cathie Wood that. ARK Investments, I, of course, had to dig a little bit deeper, try to get to know who they are, what they do, what is the fund, who she is. Um, it turns out I did discover who she is, and I did also discover why she became so famous. And it was not that difficult to understand before I introduce her, of course. And by the way, I think Wikipedia is always going to do a way better job at introducing the bullet point presentation about her life. But one thing was obvious to me when I saw this ARK innovation ITF. Yeah, before we proceed, yeah, also important that you guys know that as with any other great investor, name is Jim Simmons, Warren Buffett, Charlie Munger, Ray Dalio, John Templeton, Peter Lynch, Jesse Livermore, all those guys that, yeah, and one big thing in common is that they have their own philosophy. They all did it in a different way. Uh, Templeton was the first one investing abroad. Jesse Livermore was a great price action reader. He was a speculator, old fashioned speculator. Warren Buffett, a value kind of investor. Peter Lynch, sort of the same thing, in a different scale. Jim Simmons, a quantitative guy. Oh, George Soros was very famous because of these esoterical trading ideas the guy has. So he got like very famous for shorting the UK, the British pound. So like, wow, bravo. So as you can see, all these guys have very specific styles. They have their own philosophy, their merit, and the reason why they become so popular in the investing industry was because they were able to convert and channel their personal philosophies and thus their styles and their strategies to use them to the fullest to discover the infinite opportunities that the market has to offer. What I found out is basically that Cathie Wood is no exception to that. She can already be among those names. Some of them. She's been kicking ass. She's been kicking ass over the past 7 years. Oof, 7 years. And she has a different method. She has a different approach. She likes to bet in innovation and disruptive stocks, as her ETF so says, namely Tesla, Coinbase, Roku, Zoom. I think is her biggest holds. And getting back to the reason why this is special is it was obvious to me when I saw the charts. The ARK Innovation ITF, which is the fund she controls. Now look at this bomb from when did it kick off? It was October 2014, and at its peak in February actually. But let's say it's let's say January. At its peak, let's compare it to the S&P 500, or even better, let's compare it to their actual benchmark, which should be the Nasdaq Composite, where the innovative and disruptive stocks tend to be found. Yeah, she made 500 plus, almost 600 plus, as of its IPO, against the 182 plus that the Nasdaq did. So you don't have to dig a little bit deeper to understand why she is so special. Why has she been the target of so much noise over the past few years? But this certainly does not explain why she was so talked about and so famous over the past month. And that's also something very ostensible if you look at the charts. I love the charts, by the way. They can really tell you the story. There's no way they cannot. Of course, you can also say that they lag, but I mean, do they? They're very prudent. They're very good. They're very prone. They're very apt and idoneous at telling stories. And once again, here's the reason why Cathie Wood suddenly became famous once again. She's getting her ass kicked throughout the current year 2022. The ATF is reading a minus 57.19% against minus 29.53% of the broader market or benchmark, the Nasdaq. And wow, that's nasty. I mean, I wrote about it already, but yeah, the conclusion I have is yes, it's high reward sort of strategy for sure, and by the same token, it is a high risk strategy. And let's reinstate this: it's a high risk strategy. Now you can see why. Fantastic return she was able to give to the ETF subscribers and shareholders. But you see, in one year, she not practically, she ended up erasing 100% or nearly 100% of the gains she had back in 2020. So yeah. What else do I got for you besides from this stat? Something special for you guys that think the technical analysis then does not apply to other assets rather than stocks or currencies. And what I have for you guys is some ostensible technical, and I didn't have to know anything. I mean, I didn't have I didn't know zero about Cathie Wood to decide whether her fund was about to underperform or had come to a plateau or was about to enter in a downtrend. The charts are extreme. They were prime. They were top notch at telling me that. Let me show you why. Let's look at the signs then. So first ostensible sign is this shooting star single candlestick pattern we have here. I mean, look at this. It's just textbook. Bomb on a monthly time frame. Bomb. Just look at the volume. Also, it's just saying stop it. You're done. And the top trend is about to come to an end. Best case scenario for a consolidation and a continuation upon breakout. Worst case scenario to what ended up happening. What else do you see here that was a good premonition about what was about to happening? Look at that divergence from the price, which is in a very strong uptrend here, say until here, and the RSI, which measures the momentum, in this case of the bulls, using something I wouldn't say completely, but I mean I would say opposite to what the price was doing. This pretty much indicates that the bulls were no longer so powerful or as powerful as they once were. They didn't have momentum on their side anymore, and this is normally a good sign that the tide is about to change, and the price can. There are good odds that the price is going to at least enter in a consolidation stage, at worst to enter in a distribution phase to then reverse and to happen what ended up happening. But then yet again we need of course more proof from the market. So let's see what happened afterwards. Found something else also. 10 EMA on the weekly time frame, which is convertible to a 50 EMA on the daily time frame, which is a highly followed benchmark to ascertain whether a stock is in an uptrend, downtrend, bull market, bear market. If a stock is above the 50 EMA, 10 EMA in the weekly time frame, then we can and the EMA is sloping up, then we can say that the stock is in a bull market, in an uptrend. If the stock crosses below the 50 EMA in the daily time frame or the 10 EMA in the weekly time frame, then we can say that the odds are that the uptrend has come to an end. And look at this, boom! Look at this gargantuan candle just piercing the 10 EMA on the weekly time frame, confirmed by the one thing is when you have these candles with very few volumes supporting them, you see that it's not a serious move. What odds are it's not a serious move. But when you see this sort of volume, you really have to pay attention. You really have to look with more seriousness to what's happening here. So we got like one the shooting star candle on the monthly time frame, two the RSI bearish diversion in the weekly, and three the undercut of the 10 EMA with the confirming volume on the weekly time frame. Those are like not good signs of not a good premonition for the future of the market. Then it keeps on going. It was very aggressive. It's usually not like this. It usually just ranges a little bit or forms like head and shoulders pattern or double top, something like this. This was very abrupt, like bum, and trading below the 50 EMA in the daily time frame or 10 in the weekly. This was this was so severe. This was back in February 2021 when. Okay, what else do we got here? Yeah, drilling perfectly. I mean, 10 EMA, 50 EMA with daily time frame. We have any pattern here? Maybe already a small flag. Small. Call this a flag. Maybe a pennant. 200 EMA or 50 EMA in the weekly time frame. It's also a very important benchmark or a very important measure, technical indicator of what the long-term trend is doing. Price above the 50 EMA on the weekly or 200 EMA on the daily. Uptrend, long-term uptrend, and as long as the trend line or the EMA is sloping upwards, price below, normally say just don't trade this asset on the long side if you want to have the odds on your side, because the price tends to respect the trend. But what else we got here? Okay, this triangle formation here, this pennant here with the breakout below, is also not a good sign, not at all. About what's about to happen with ARKK. Let's see what keeps on developing here. Okay, it goes sideways a little bit, although it's already broken below the 20 MA or 50 MA. It's okay. It's losing volatility here. It's contracting. These volatility contraction patterns are very beautiful. And I like them very much because they sort of give you a decisive moment where a breakout is gonna, and if you want to really have odds on your side, a retest. So breakout and retest will tell you where the price is heading to after these fractal moments. Okay, we have to readjust here the trend lines. That was a breakdown on the downside. There's another touch here. We definitely do have a triangle here. And boom, look at this. This is a death cross. This is a very bearish signal. 10 EMA crosses below the 50 EMA on a weekly time frame. This is extremely bearish. It's an extremely bearish sign, coupled with the fact that there was a triangle with this with this abrupt breakdown. Yeah, this. I mean, this would be a good reason for you to watch closely what the stock was about to do. This would be a very strong reason. Maybe most likely, if you're a trend follower, to step out of your trade. This would be a very worrying signal for sure. When the price is forming here, and I mean the bulls are not able to push the price any further than this, or any further than this, not even to create like an edge shoulders pattern here or a double top pattern, you should really be worried at this stage. You should be like and I mean, unless you fundamentally believe that the fund is going to perform fantastically over the long run, then yes, then buy and keep it forever for 30 years. Otherwise, if you're like a sort of a position trader or a short-term investor, short to mid-term investor, then yeah, one, two, three signals of very bearish signals. Death cross 5, break down of this pattern, this distribution consolidation distribution pattern. 6. Then there's something else here, which this thing here before the. I know it's very easy to speak in insight. I know. But yet again, we cannot deny that there are some ostensible signs of bearish power here. Look at this textbook flag against the 10 EMA bomb with the undercuts. This is another very bearish signal. If you needed any more than this, I mean, what else do you need rather than this? Shooting star multi-time frame with a lot of volume. RSI bearish divergence. Yeah, this time you should be like maybe not, definitely not alongside. Maybe good idea to start looking for ways to exit the trade. Maybe it would not be a bad idea also to take my profits already. And then you see this consolidation pattern with the bulls with no power on the upside, and the bears keep on pushing the price below. Then you see the 10 EMA crossing below the 50 EMA, which is a death cross signal. Bearish flag. Wow, come on, this cannot be more obvious than what it was. I mean, of course, yet again, insight is fantastic. It's beautiful, right? We're all by Warren Buffett when you see things in insight, but the signs here are very ostensible, so to say. I was not paying attention to this ETF. I usually don't like to trade ETFs. Neither do I like to trade on the short side. I think on the short side, the best case scenario you make 100%. On the long side, the best case scenario you make it's limited what I can make on the long side. So for me, it's a no-brainer. I don't like to trade on the short side with stocks, but if I were to dig deep into this asset, this ETF, then I hope the signs were there. Something else that I want to conclude with: is this a good time to perhaps step in? Maybe yes. Let's look very quick at volume profile analysis. See, this is very big consolidation here, so the odds are there's going to be something here which the volume profile does confirm. Look at this area here. Definitely support area. As this come to an end, we can never know. I would need something else from the market. I'll need more proof. And one thing I can see here, this is a good sign already. Look at this low and look at this low. And we see that the RSI is doing something different. So there's a bullish divergence with the RSI, meaning that the bears are losing momentum here. Is it enough? I don't think so to deem it as it's a strong signal, but the price is still trading below the 10 EMA and below the 20 EMA. For me to consider going long here, I'd have to see the price above the 50 EMA, and I have to see the 50 EMA above the 200 EMA daily time frame. I mean, and 10, 15 the weekly. So I'd have to do something like this: undercut. RSI's EMA is just swap and bump. This is what I need at least to consider a long position. That's it for today's guys. For today, guys. Hope you guys have enjoyed it. Drop me some comments, interact with me, ask me questions. I love to discuss about stocks. Happy trading, a lot of profits for you guys. Stay cautious. The market is still very volatile. And cheers. Have a nice week. Ciao, ciao.